chilly Tuesday, and of course to our panelists here. For those of you who know me, I'm Hannah, and I can't believe it's already been 15 installments teaming up with Dimitri and Enduring Planet team on these community engagement series. All of you are so welcome here, and we're so excited to get you involved in a very dynamic conversation around grants, especially as the baseline has moved around us. Please bring your questions in the chat. We'll weave them in real time. And as you all know, Enduring Planet has started this series as a way to kind of bring and demystify topics across the climate capital stack. I also have been partnering with them because I work as a venture partner at Planeteer Capital and as a fractional CFO across half a dozen climate companies. So have seen these problems operationalized in real time. And it's such a privilege to bring together such a stacked panel to talk about grants in specific. So with that, let's go Elka, Morgan, Aaron, and then Joel for introductions as we kick off.
Thank you so much, Hannah. My name is Elga Tria. I'm so happy to be here with you all today. I'm an attorney at Wilson Sonsini. I help early stage and growth companies work through blended capital stacks in combination of venture capital, strategic funding, and of course, non-dilutive federal funding opportunities and grants, DoD, DOE, EPA, and lots in between. So really excited for this conversation.
Everyone, my name is Morgan. I'm the co-founder and CEO of a company called Popular Power, which is an intelligence layer for solar and storage. But my previous company is called Navajo Power Home, and I'm still on the board and done a lot of grant work through that previous company.
Incredible. Morgan, will you give us one sentence on what's
Sorry.
going on with Popular Power?
Yeah, Popular Power is the intelligence layer for solar and storage. So it's a software tool that works with large scale distributed solar companies to maximize their assets production. And then Navajo Power Home, the other company, is a solar as a service provider for off grid and grid poor homes across tribal lands in the United States.
Incredible. Thanks.
Hi, everyone. My name is Erin Davis. I'm the COO and co-founder of Enduring Planet. We offer fractional CFO services, and we also lend to climate entrepreneurs, particularly against state, federal, municipal grants, government contracts, and also commercial contracts.
I'm Joel Armin-Hoyland. I'm the founder and CEO of Climate Finance Solutions. We are a global consulting firm that helps climate tech companies secure large-scale, non-dilutive public funding, primarily grants, but also incentives, subsidies, tax credits, and some government-secured debt as well. We've secured over 1.6 billion globally since our founding, and our team secured over 500 million in Europe as well. And we've managed about 275 million in grants as well.
Incredible. This is like the full ecosystem of grants here. We've got founders who have received them. We've got Joel and team who help kind of strategically craft and apply and receive them. You've got your counsel and also folks who can lend against those grants and receivables. This is an amazing diversity of voices to talk about like why 2026 is a bit of a new dawn, if you will. I know there's a lot going on in the news these days, and it's hard to put personal opinions on current administration and policies toward climate aside. But the reality is that in the grant ecosystem, there have been meaningful shifts in the quantums of those grants and specifically where they're coming from. The bad and the ugly, of course, looks a lot like the DOE has rescinded many different grants, and I know that's caused problems for many of the founders in this room. But the good looks like so many of the projects that are continuing, especially with the uplifts in power and energy demand, will now be able to kind of reorient and reapply from the Department of Defense or other ways in which you might turn focus toward the critical minerals and metals applicability of your grants or the use of kind of domestic resources and waste materials. So many of those projects will still be relevant in this new future. But Joel, I want to come to you first about this kind of new normal, right? You told us a little bit that 2025 was the kind of stop, wait, and see, and the dust is starting to settle. So what's changing about the ground game as we emerge into 2026?
Yeah, I mean, 2025 was basically chaos on the federal grants front, right? We've seen programs being canceled, as you mentioned, contracts being canceled. I mean, the staff changes at especially DOE, but other federal agencies have made a huge impact on their ability to deliver and respond. I think at this point, most of the programs and awards that they're going to cancel, they've basically canceled already, except the ones that are still kind of trying to manage the negotiation. The DOE just finished their long-awaited reorganization. The DoD or DOW now, I guess, they just changed around their innovation ecosystem. So, as you said, we're starting to see the dust settle. I think the new programs that they're going to be putting out are their programs, new administration's programs. So they're less likely to cancel them. Of course, it's a lot more uncertainty still than there was previously. I think there's some certainty in terms of what they're going to be funding, right? There's going to be a smaller range of technologies, right? The DOE, as you mentioned, critical minerals, manufacturing, nuclear, geothermal, grid-enabled assets, and of course AI and quantum is really big now, and of course hydrocarbons and coal are really big priorities for this administration. DOW has focused their technologies they're interested in as well, right? They're focusing more closely on what they call war fighting priorities, but still looking at supply chains, critical minerals, biotech, and a variety of other things, just a little bit more in the context of war fighting. I think folks that apply to USDA and Department of Transportation and others, there are a lot of these kind of familiar ongoing programs still. And then we're also probably looking at a lot more federal funding coming out in Q1, Q2 of this year, because there was not that much that came out last year. So there's a lot of funding that's kind of ready to be deployed, and they are working on new NOFOs and solicitations that are going to be coming out. I think pertinent to this conversation, some of the federal rules have changed, and it's really important for folks to understand those. And Elke probably understands those as well as or better than anyone in this room. But there was a really important executive order mid-year last year that really changed the rules for federal grant administration. So they're really explicitly political at this point and have much tighter oversight from political appointees. Previously, the merit review process was basically controlling, right? Peer experts would come in and score the proposals. And at this point, senior political appointees essentially make the final decisions around like alignment with administration priorities. Federal grant contracts now all have termination for convenience clauses and stricter rules on drawdowns, so they can pause or terminate projects midstream with no fear of litigation or minimal fear of litigation. There's a lot more scrutiny on reimbursement rates, more penalties for missteps. So in non-compliance. So I think that, it might sound scary, but it does not mean that you should not pursue federal grants, right? You just need to make sure that you fully understand the requirements, that you're engaging proactively with the agency, and that you're setting up the right systems. And frankly, that is the advice that we've been giving to people since I've given to people forever. So, it's still the right way to approach grant administration, just the stakes are a little bit higher. And of course, federal grants also, I always want to mention, are not the only ones in the world, right? You should always have a diversified funding strategy. If you're operating only in the US, there are state grants, municipal grants, utility RFPs, depending on what you're doing, other things. Obviously, Europe has a ton of climate funding. Actually, the majority of the work that we do now is in Europe. Canada has a lot of provincial and federal opportunities, Australia and other markets. So I think it's important to understand what's going on at the federal level, but also not kind of myopically have a view on that.
Thanks, Joel. A follow-up question on that is one of the tactics with more of the emphasis focused on the political priorities here is relationship building with or lobbying with political appointees. Is that something you're seeing founders spend more of their pre-grant preparation time on?
Yeah, I think it's important to have like a multi-layer funding strategy. So the political appointees and the agencies really sit at the top. So and they kind of set the overall policy and do have a bit more of a hand in individual decision making at this point. But it is also really important to have a relationship with those like line program managers that actually know the ins and outs of every single FOA. have a relationship with those program directors that are the ones that are making the like super individualized decisions as to what goes into, all the requirements. But absolutely, I think it's more important than ever to try to have those relationships up and down the levels in the agency.
Incredible. And Elka, talk to us about what you're seeing. I want to hear your perspectives in kind of two broad strokes. The first is, I know you've been working with a number of clients who have taken legal action to litigate what have been rescinded but previously awarded grants. How has that been going? And then two, Joel commented on a number of these kind of new clauses that are helping avoid the administration avoid future litigation if they decide to pause or cancel in the future. What's changing in the contractual basis for the grants that are being administered now?
Sure. So of course, maintaining all, proprietary confidentiality here. Lots of startups and early stage companies received conflicting notices throughout last year of sort of where their grants stand, accessibility to them, reallocation and otherwise. As Joel correctly noted, that executive order really changed the contractual basis, which allows a lot more muscle on the administration's side to unilaterally change the terms of these agreements. There were always sort of terms and conditions associated with them, but there was generally a process around them. So certainly it's a calculated decision that startups should make around whether and to what extent they want to pursue grants that perhaps have been adjusted or rescinded or changed. Certainly a number of our clients as well went through a process where they had to do audit requests and so forth. So there is an opportunity to work with your project officer to understand the parameters and interests there. But, you know, many verticals to discuss with counsel pros and cons, applicability of outcomes, cost, and so on and so forth. Luckily, as we've already identified, though there are shifts, there remains a number of non-dilutive funding opportunities out there. So it's kind of a cost benefit analysis that folks will have to make in determining whether they want to pursue prior grants that have the terms have changed or pivot slightly to pursue grants that are more readily available.
Helpful. Um, I think that's a great way to springboard us into the meat of today's conversation, which is not just like when do grants make sense, but like really how to tactically make the juice worth the squeeze here, and what you can do to be ready kind of ahead, within, and post receipt of grants in this new normal. Erin, you work with a ton of founders who receive a diversity of grants, and you kind of underwrite those from your lending perspective. What do you think is the single biggest lever that founders are actually in control of to determine whether that grant is, good and worth the squeeze or a little bit more of a time suck?
Yeah, I think that from my perspective, properly cash flow planning is the kind of best preparation you can do. Obviously, on the technical side, you need to know what you're doing, but I think the companies that plan for, when the cash is coming and going, especially planning for delays and like those stupid kind of documentation or administrative delays, that kind of thing. Just planning for liquidity gaps up front, instead of treating it like just free money and it's like operates outside of your business plan. So like not integrating it into your forecasting and like maybe spending ahead when you really shouldn't be, because it's not documented within the grant itself. I think that's what really determines, the I don't know, the health of the project overall.
Incredible. Um, Makes a ton of sense. I know we're going to dive into some of those actual tools and tactics for grant management within. But Morgan, I welcome your commentary also on what's shifted. You've received grants, with Navajo Power Home prior to this administration. I'm sure Popular Power may or may not be considering kind of given the electrification uplift grants today. Walk us through kind of your current state of thinking in the market, and also as a operator in the seat, What do you think that founders often miss as kind of out of their control, but is actually something they can very much kind of grab by the horns?
Yeah, so for a little bit of context, Navajo Power Home in the past 2 or 3 years received a little over $7 million in, you know, what many people might consider like small scale federal grants. One was a $2 million project with the USDA, another one was a $5 million project with the Department of Energy. Luckily, we have actually been very fortunate and not had any of those projects canceled. I think that there's still like a really big emphasis on energy sovereignty for tribal lands, so we were not necessarily harmed in kind of the whole restructuring of 2025. In terms of what is in founders control, I think a lot of people approach grants like assuming that they're going to have to make some sort of change to their business model, some sort of sacrifice, like add some like new capacity, and I think that that's like very much the wrong way to approach it. I think that you have to be really locked into your business model, understand what your value proposition is, um, understand your unit economics. And I think the best grants are going to really just like propel everything you already have and that you're already doing well in a really repeatable way. And so I think that there's a lot of grants you can get at the early stages of like your product concept or like your go-to market motion that are, very much like 200K, like 500K, maybe even a million, depending on like the type or like size of your company. But, like low risk, like low effort, like capital that you can use to experiment. But once you're really thinking about like grants as like a big source of financing for your company, I think you really need to be locked into your business model. And I think like the reason our grants have been so successful in terms of just the outcome is because we were very, very cutthroat in like understanding what to say no to and what opportunities to pass up on. So a little bit as Aaron was saying, like it's never free money, and I think that's a muscle you kind of have to exercise and understand that like saying no is actually has a huge upside, and wait for the right opportunities to come up to come through, because you don't want to be figuring out what your business model is, who you're selling to, and what the product is during the course of a grant, because it's just not going to be as successful. So I would encourage founders to really be in control of that.
And look, I think those kind of like smaller, look, 2 million and $5 million at a time is like no small pennies out there.
I guess depends who you ask.
Yeah, right. Certainly isn't necessarily the headlines we see with triple digit, millions, but it can make a huge difference, like you said, when that can help cost share with like over 50% of a given project or a given portfolio of distributed assets. So really, really meaningful. Uh, and like you said, when it's seen as the jet fuel and the propellant, like constantly asking yourself that question along the way can really make or break the difference. While we dive into that, let's like zoom out with the kind of pre-grant prep. You think you should go after grants. You think you've identified a few, but let's talk a little bit about like nailing the vocabulary, making sure that you know you're going after the right ones aligned with your strategy and not getting distracted in any way, and making sure that it truly is the jet fuel Morgan's describing. Elka, I want to bring you in to help elucidate for this room fundamental building blocks and kind of vocab 101 for grants, especially as folks are considering navigating for the first time things like counterparties and subrecipients. Can you give us a little bit of just the 101 overview of what you're seeing folks as they go tackle?
Sure. No, absolutely. So the normal places to start are, and this is a great chat that I'm watching here unfold on the side. So forgive my eyes scrolling, but a lot of people have asked these questions. So you always want to start with the what we call the FOA or the NOFO. So the document that is put out by whatever municipality or federal agency that is saying, here's this opportunity for money, here's a pool, here's what we're looking for. There's a lot of technical nomenclature included in there that can often be very arcane and cumbersome to review, but it's very much worth your time to understand the terminology there, and also to keep in mind and make it a tool that you're using to really understand 2 CFR regulations for future compliance. So just keep that in your back pocket. But generally, the parties are what's called a prime recipient, so the entity that is directly receiving the money from the agency. And there are usually parameters and requirements for that prime recipient. So you have to read the NOFO or the FOA very carefully to understand those parameters. Sometimes it will be required that it's a nonprofit. Sometimes it's required that it is based in a particular geographic location. Sometimes it is required that it is X amount years old. It will really depend on what the nature of that is. A second common party, and that is often related here, is what's called a subrecipient. So a subrecipient can have a couple of different flavors, but in general, it's usually a lower tier entity that is earmarked in the application to receive funding for a particular purpose. The particular purposes can run the gamut of financial assistance, which can essentially mean like a grant of money to spend to build something or to invest in something, invest being a technical word there, or technical assistance is another term that is used really often, which is more like paying for example, a program like this, where you are using the money to educate an industry or a fraction of it. Those are really kind of some broad categories that you should familiarize yourself with. And then once you understand the parameters there, you can work with the folks on this call and the Enduring Planet team to really understand your options there. For example, maybe you're set up as a traditional C corporation because you intended always to take in venture capital money. And so you don't really fall into that nonprofit status, but the particular grant is seeking a nonprofit. There are creative ways that you can work under fiscal sponsorship to obtain the status required by the FOA and the NOFO to still get access to those fundings in a creative and useful and thoughtful way. There's a number of both legal and financial and accounting compliance dynamics that will also come into play. So it's really important to spend the time in those NOFOs and FOAs to really understand the regime that is expected of you and whether or not you're able to pull that off internally on your own, or you're outsourcing it to qualified folks.
Incredible. Thanks for that. We Morgan, bring some light here to like how also for the folks who are engaging with these traditional processes and working with partnerships via subrecipients or nonprofits. I know you've done some of that in the past. Maybe you can comment a little bit on relationships you built early that eventually were really productive. And also let's like bring this thread live of like how important is it to engage with elected officials, kind of what Joel and I were just talking about when it comes to this like in an ideal world, no, the process is pretty like straightforward and able to be a little bit apolitical. And also this new 2026 reality where it does feel as though many companies have kind of earned recognition that has helped them along the way by educating their officials about how kind of this any innovation will affect their constituency.
Yeah, that's a really hard question. And I was like really battling with how to answer that. Like, because in my experience, like, no, it shouldn't matter. But I do think like really being engaged in like the larger like community context really does matter. So for example, like we had really strong relationships with like a lot of what you might call the kind of like departments like on the Navajo Nation. And I think that helped like when program officers, who worked with the government would go and kind of ask for references. That being said, in our experience, that was not happening at any elected official capacity. It was happening, kind of longtime bureaucrats speaking to other longtime bureaucrats. Um, what I will say, for example, which I always thought was like funny in kind of these grant like application and like approval processes is like, you know, I think grant officer or program officers were like kind of used to this, what I would call like old school style of grant making, where they think that you're applying for a grant to do this for the first time ever. And it was really hard for us always to explain, like, no, we exist. Like, we will exist without this grant. Like, have you visited our website? Like, but that was just never a thing that was happening. Like, no program officer was ever going to look up Navajo Power Home online and like see that we existed. Like, that was never going to happen. So I say that only because like I don't know like how much you really exist like outside of this program officer's like stack of papers like in front of them like at that moment. They're not driving across like Highway 40 and seeing like billboards about us. I don't know. um but then the other question about like developing partnerships in general, so I think like we probably made the mistake of like going into a lot of this years ago thinking like reading FOAs and saying, oh, like you have to be a nonprofit. And I think that's a huge mistake people make, because there are so many ways to craft like a very, very like compelling and very strategic partnership with a nonprofit that will be your sponsor. And you can, it's up to you how involved or really not involved you want them to be at all. So our USDA grant was technically, we were technically a subrecipient, and we had an amazing relationship with this cooperative business accelerator program we were involved in. But I will say, like, that wasn't the only candidate we had at the time to be our sponsor on that grant. We had developed other relationships with other entities that do fiscal sponsorships, and specifically have programs dedicated to help, for profits and public benefit corporations access grant funding. And I think as a founder, it's your job to be ruthless and, like, bothering people and following up and, like, always asking. I mean, we would, like, look under the carpet for, like, just random people in our network to ask if, like, maybe they had a way to fiscal sponsor like a grant for us. And I really think that that's a hard part of the job, but, like, you can accomplish it, and it's going to open up a lot more doors for you. And I will say, honestly, being a subrecipient on a grant, for us at least, was administratively a lot of times easier than being the direct recipient of a grant.
I think also on that point, totally agree. I think it can be a lot more administratively simple. It can help you. Subrecipient strategy rather can help you with getting around eligibility requirements. But I would also say don't just be a subrecipient because you're scared of the administration,
Yeah,
right? And not that you were doing that, Morgan. I know that you weren't, but a lot of people kind of say, well, maybe I should be a subrecipient on this. And really, the consortium and the governance and the partnerships should be led by the project design and structure and eligibility requirements, not whether or not you want to do the administration. You should only be applying for grants where you think that there's a sufficient ROI. So if it makes sense
absolutely.
in the
Yeah.
project design for you to lead, you should lead. If it makes sense in the project design, if it can go either way, then you can make a decision on that point. And then if it makes more sense for someone else to lead. But I would say don't just do it because you want to limit your administrative exposure.
Okay, that's a really helpful contextual frame to talk a lot about, like, these are the decisions made in the pre-application strategy, right? It's like build, partner, go it alone, work with Aaron and the Enduring Planet team to think about cash flow amidst the timing of it all and planning for delays. Joel, what else belongs in that bucket when you're thinking about the grant selection, the scope of it all, kind of how the application is then framed, the timelines of delivering the application, and the potential delays in receipt of funds? Like, what else goes into making sure that there's going to be kind of more value than just kind of operational drag?
Yeah. I mean, I think, it's a really good question. Pre-application strategy is definitely the single biggest determinant of whether the ROI is there and whether there's a downstream burden and it feels like a burden, right? And the power is really in your hands, right? And to determine whether or not something is going to be, as you said, juice is worth the squeeze, right? So if you're going through a strategic process beforehand to select a grant that is sufficiently large to meet the capital requirements that you have, you're prepared for the administrative requirements, you have the resources to pursue it with a high success rate, and we definitely recommend that you work with someone, whether that is an outside consultant or someone in your team that has prior experience to give you a sufficiently high success rate to make that return on investment worth it, because that is a big component of that as well. And then you also, you are in control of the project design, right? So you want to be designing projects that are really well aligned with your roadmap. If you're doing all of those things, then it's almost always going to be worth it. But all of that is mostly before the application itself. And I think the overall strategy that we use is really to apply for a smaller number of grants that have a higher dollar value and a higher chance of success. And if you are assessing the right opportunities and designing your projects in the right way and select, then I think we've kind of proven that is really the recipe for success. Not applying for as many grants as you can, thinking that you're going to, that's going to help you win. You're going to win the grants you're going to win, and you're not going to win the grants you're not going to win, right? And so you need to be a lot more selective. When you're going into an actual grant project, the way that you are designing and scoping the project really also defines reporting complexity significantly, right? So instead of having a million tasks and milestones, you have to report on every single one of those. The reporting requirement for a subtask is a lot smaller. So you really want to limit those tasks to a smaller number of very concrete, high value deliverables that are easy to measure, easy to report on, are defensible, right? You don't want to have like two tasks that don't make sense. They have to be logical for your actual project. You really want to limit those. And you also want to scope the project to something, it's kind of can be a very nuanced balance, but you want to scope the project to work that you know you can execute, and frankly, work that you probably were going to do anyway, or at least is very well aligned with your roadmap. But it also, both on the overall project level and an individual milestone level, needs to be sufficiently ambitious for the agency to see the ambition and value in that. So you have to kind of thread that needle a little bit. And then you also want to write the tasks and objectives and milestones to give yourself sufficient flexibility that the decisions that you need to make throughout the project, these multi-year projects, and being able to react to new information doesn't require you to go back to the agency every single time you need to make a small change and justify moving money around. So that is also something that's like pretty nuanced, because you have to have specific tasks, but you also want to write sufficient flexibility in there. But if you're able to kind of navigate all that nuanced project design, you can really limit the administrative burden on yourself.
Amazing. It, okay, Joel's too humble to plug himself, but I'll plug Climate Finance Solutions for him, the company that Joel leads. Having a partner who kind of knows how to walk that balance with you in all of the pre-grant prep as well as administration kind of post receipt is tremendously important, because to Morgan's point and to Joel's point, it's like uh there has to be ample ambition that you're communicating, while ample kind of leeway that you're giving yourself to not get ahead of your skis or overpromise and underdeliver there. And in so many ways, you're telling the story that this will progress with or without the grant, and that you're operationally a big enough company with a great Navajo Power Home website, that you're working across multiple geographies, that like you're existing and going, and that this really can augment those kind of next steps and be I find this is very true also when you're pitching catalytic investors or any other philanthropy, right? You have to show how it is net beneficial and increases impact, but how you have the kind of infrastructure to continue to support the plan without that process. Maybe our last bit here then on the kind of pre-grant thinking. Erin, I wonder if you might go off script with me a minute and talk a little bit about like how intensively do you work with founders as they think about managing their cash flow specifically? And like what are the requirements of receiving grant financing from Enduring Planet when it comes to, okay, we think we know we're going to go after this grant. How early should we start exploring working with you to front load some of that cash and to think about what then comes of the accounting and reporting financially?
Yeah, we are not really working with companies like on their applications. We would send them to Joel. Of course, we have like, some advice to give, but we're not the experts in that piece of the puzzle. I would say like the earliest we start working with people is once they're like in the contracting process. So in order to get money from us, you need to have a signed contract. But we can start, underwriting and do our month-long process before the contract is signed. And we just need the signed contract for the actual disbursement of cash.
Wonderful. And do you see founders mapping out, like, what are some of the best practices that they're using to map out cash flow receipts and timelines ahead of either application or that kind of signature?
Yeah, I think this goes back to Joel's point, is just like completely understanding the particular grant that you're applying for. So like what is the administrative burden? Like what kind of accounting do you have to keep track of? What do you need in order to submit for a reimbursement? And so like we often see that the first reimbursement takes the longest because you put a T where an I is supposed to be, like some little teeny thing, bureaucratic thing didn't get filled out correctly. It comes back to you and restarts the process. So I think like also, really understanding when the government agency plans to reimburse. I think actually like most agencies that we've seen are kind of fairly on schedule with what they say they're gonna do. And it might be something ridiculous like 90 days, but at least you can know that and sort of plan for that. And then again, it's like coming back to Enduring Planet, do you need cash to kind of bridge that 90 days? Or like the whole thing is kind of ridiculous, some of these grants, because it's like chicken before the egg. You're applying for a grant so that you can install, solar panels, but you don't have the money and they're not going to give you the money until you buy the solar panels and install them. So that's also where we come into play. And I think knowing exactly how you're going to spend the money, like what is like reimbursable for grants and what's not, is super important.
Amazing. I appreciate that example. And also, I think Morgan's comments probably resonate with a lot of the founders here about being like so dogged, leaving no stone unturned when it comes to actually understanding how this is going to work in practice. Like, is that new bank accounts? Is that expense cards associated with that bank account to make sure that, like, financially, operationally, those things are all tracked as smoothly as possible? What are all the little costs that add up in order um, to make it worth it, right? Because they are worth it, but making sure that you can kind of run when you hit the ground is a really important piece of it. And helpful, Aaron, to hear how founders can and should approach you at kind of what timing. When it comes to the strategic alignment, we've talked a lot about like don't let it derail your roadmap, let it kind of continue what you were already doing with a little bit of extra juice. Elka, I wonder if you might help us understand like what happens if you've accepted a grant that then kind of reprioritizes or isn't well aligned with your original intention to commercialize technologies? Like what types of risks might be embedded therein?
Sure, absolutely. The way I like to think about it is that this grant distributor, whether it's a municipality or an agency, becomes one of your largest investors, depending on how your cap table looks, right? So you have obligations to them by virtue of the terms and conditions and the application that you put forward. People sometimes don't always conceptualize it that way, but you are putting out there that I, company X, am agreeing to do XYZ with this money, and you are bound by that. To the extent that you got over your skis a little bit in your application, sometimes I hear founders say that they adjust their roadmap to meet the needs of the application or meet the NOFO or FOA needs. It can be a bit of a distraction. So you want to, as has been described already, you want to really think through whether that's worth the squeeze or not and how much extra effort will be required to pull that off because you will be expected to pull it off. You also want to pay attention to um, the award agreement and any terms and conditions there too, because it will have very clear requirements around any changes or pivots that you are making. There are some pivots that are non-controversial and just require an email to your project officer, and there are other changes that are absolutely mandatory and can be grounds for rescinding the agreement, clawing back some of the money and so forth. So it's really important to map that out, however is conceptually appropriate for your team. And then one thing I'll tag along to what Erin was saying is when you're building out the application and the budget associated there too, you want to think through the fees that you will need to spend to make sure that the compliance regime is in place, right? You don't want to take in the money, budget it only for the purpose of buying solar panels, and then realize you actually probably have $500,000 in overhead to pay for the compliance needs to just pull off the requirements of this application. Then you're trying to figure out how you're going to pay for that. So again, it's very much worth understanding the compliance scaffolding required, then budget for that, right? And then to the extent that there are real material shifts or adjustments, great communication with your project officer will be really helpful. And then leaning on your teams here, you can see what has worked well or not worked well in terms of framing or why the pivot occurred, or why you were forced to make XYZ decision. There's also certain levels of grants as well that take that into account, right? There are certain grants that are perfectly available for testing out certain materials, so it's well understood that there will be machinations and iterations that make sense. So spending the time upfront, mapping out the changes that are considered critical changes that require prior approval from the agency was very much well worth your time. And then make sure to budget for experts to come in to make sure that your compliance regime is up to snuff.
And Elka, for compliance and overhead, do you want to give a super quick pitch on why people should think about a negotiated indirect cost rate?
Absolutely. Absolutely. So if you have an indirect cost rate, this sort of presupposes that you've done contracting with an agency or otherwise. You can take advantage of that right away. And then depending on the agencies, there's other sort of like minimal uh, percentages that you can take account for. But what it does is they assume the costs associated with that. Yes, there's a little bit of an additional procurement element there, and you'll have to make sure that you're contracting in a way that is in alignment with those regulations. But essentially, you're getting this money to pay for those costs without an additional hit to your balance sheet. But Joel, I welcome your additional nuanced thoughts around that as well.
Can I also just add something about a little bit about like the compliance and like hiccups along the way. I'm not referring to like any major compliance issues, but like I think when we were starting out with doing a lot of our grants, we would think of our program officers as like these government enforcers, like so scary you can't talk to them or like tell them like any hiccup along the road. And that is like that could not be farther from the truth. Like your program officer wants to see you succeed, and like we've had lots of hiccups like in our grant implementation. In terms of like something that we wanted to change the budget for, timing, like a big misunderstanding, like lots of stuff. And at no point was it like some big problem where we were suddenly in trouble. I think in my head it was like, oh no, we're going to get in trouble and they're just going to like revoke our grant like one day, one day all of a sudden. So I think people like really lean into your program officer as like your supporter and like somebody who's kind of like your buddy in this. And I also think like you have agency to like push back to a certain extent too. Like if it's not, your market, like the problem you're solving, like the community that's benefiting from this, sometimes like a little bit more than they do. And I think like they're also, a good program officer, I think, is also kind of looking to like understand that feedback. And I'm not saying it's easy and that they're just like, oh yeah, okay, great. But push back where you feel it's appropriate in order to design like the best possible outcome.
Joel, any last comments there?
I was just gonna say that's a really good point. um, and the earlier you talk to them about an issue, the better it's going to be. But you do not want to surprise them with something that's a really big issue. You want to flag it as soon as it might become an issue so that once you get around to actually saying, okay, we need to maybe like renegotiate this, they're like, oh, yeah, we've been talking about this for a long time. Let me go to bat for you.
I love that phrasing of it, like treat your grant program officer just like any other investor in your company, right? Good, really good framework. I want to get a little bit specific, shifting into kind of once you've received the grant, a little bit more on this execution reality. Joel, maybe you could walk us a little bit comprehensively through the steps if you're a founder of like, what's it going to look like once you get the thing and you're actually managing that grant and kind of doing this consistent communication process? Specifically and like tactically, what systems are you using? What types of software do you need? What types of extra bank accounts? Like, and what's premature for companies that maybe don't need like a full-fledged, internal grant liaison or head of special projects? Like, tell us a little bit more about how you see that managed internally.
Yeah. So I think just to maybe step back, there are three main elements of grant management and reporting, right? There's technical reporting, which is what did we actually do on the technical side? What was the work? What were the activities? What were the results? Financial reporting, which is kind of on a more frequent basis for reimbursement, or in the case of milestone-based payments, what did you do to achieve those milestones? And then there's effort reporting, or which is largely just time tracking, effectively tracking the time and effort that your team has put in. So all those things are really important. I would say the biggest exposure is on the financial side. The biggest like legal exposure is on the financial side, but you need to do all of those three things really well, and they all integrate with each other. So when you're doing a report, all those things have to be consistent. Consistency in reports is also really important. This grant management software you're talking about. These are like fairly expensive platforms where you are managing every single aspect of the grant on the platform, and there's pretty widely varying degrees of quality, and actually depending on your types of programs you're applying to and the type of organization you are, whether you're like a government and or a tribal organization versus a startup, that can vary. So you do need to make sure if you are going that route that you have the right software. There are pretty significant setup costs and they do cost a lot, but if you have a grant that is in the tens of millions of dollars, or you have multiple multi-million dollar grants, it does make it a lot easier to manage. Or if you have a big organization with a lot of people that are collaborating, it makes it a lot easier to do once it's set up, and it ensures compliance, right? So especially in this environment where federal rules and penalties are tightening, it is implying compliance is more important than ever, and this will is the best way to really ensure compliance. I think if you have fewer grants or smaller grants, I think it may not be worth it to kind of make the investment to implement or use that software, but you do really need to be organized and prepared and set up robust systems. I definitely don't recommend managing grants via spreadsheet ever, really, unless it's like a really tiny foundation grant that has like minimal reporting, not even an SBIR, which also has like very minimal reporting. You can get project management software for like tens of dollars per month, and Asana, Notion, ClickUp, stuff, things like that that actually enable you to effectively manage projects and tasks and timelines and assign things to people and just do a better job of that. And that is the best way to actually manage a grant if you're not using kind of end-to-end software. On the effort reporting side, you can also get very cheap time tracking software, again in the tens of dollars per month range. This is really important because pretty much any grantor is going to want to see compliance that is not just numbers in a spreadsheet. And you can just, for any of these things, Clockify and others, you can just like export your time tracking report and make sure that it's kind of bulletproof. And it's just easier, frankly, to manage. It does sometimes require some culture change to get people to be using the time tracking software, and that is one of the hardest things that we find in implementing these things. But once people are kind of used to it, that is really important. And then on the technical side, you have to have reporting schedules. You want your reports to be templatized. You want the workflows that you're doing through the normal course of the project. You want to be putting the data in the right place so that it makes it really easy to grab those for report and in the right format for you to be able to grab those to report and put those into the reporting templates, and then assess all of your elements for compliance and then submit, right? And then of course, like the templates and all these other things should be tailored to the specific program requirements and project requirements. And then on the financing side, you want financial support internally or an external firm like Enduring Planet that really understands how to do DCAA compliant accounting, basically grant compliant accounting. You want to be able to have best practices, segregating your grant funds into separate accounts. On the federal side, if you have it used to be $1 million. I think it may be $750K that you get in a year. You're going to be subject to audit, so you need to be audit ready. But I think on all these things, you do need to kind of calibrate it to the level of both to kind of what your organization needs and what they already use, and what the requirements of the grantor are.
I would just kind of to put a point on that. We see from our side when people aren't doing like methodical cost tracking and kind of repeatable, processes, it delays them in submitting for reimbursement. And then all of a sudden you get like this, you're even more delayed, and it's not just the government's fault. So I think these are, kind of seem like minor points or a hassle to put in place, but once in place are super important. And then on the audit side, we are seeing like the state of California is, auditing agencies and sub-agencies within the CEC. So, I do think it's just really important that you have your ducks in a row, even if your, like grant manager program doesn't, because that can also just delay things. And when they are doing that, they don't really give a timeline for when it's going to reopen. And like an agency-wide audit could mean that, a program that's like not necessarily the target, but is still under an umbrella, gets paused.
And it's just going to take you a lot more time if every report is a fire drill.
Yeah.
And so if you are just setting, you take the time to set up your systems in the first place, it's going to just be way easier and take less time overall.
Super appreciate that. There's a quote, I think, that says, "We don't rise to the level of our goals, we fall to the level of our systems and our processes." And it feels like if you're gonna take this on, right, it can be tremendously helpful, but like take it on with seriousness. Like don't take it on like it's just free money. This is a real commitment and but worth the effort. On that vein, I think the internal resourcing feels like the biggest black box specifically, especially if you don't have someone who comes from the grant world, has done this 100 times before. Maybe you're running Scrappy, maybe you do have a chief of staff or a head of special projects. But Morgan, I wonder, with kind of like limited personnel and specifically in your experiences in the past, how did you decide who owned this internally? Like, who is the dogged individual who is kind of making sure that all those T's were crossed and I's dotted, and how much of their time, maybe outside of a typical role, were they allocating to grants?
Yeah, so we, I think, wanted to be very realistic with like what our capabilities were. We were a very small team. I was kind of subbing in as like a strategic kind of like CFO slash like financing support, like as a board member, helping our general manager who had no exposure to like these types of processes. So I think on the kind of pre-application and the prep side, we did decide to go with an external. So we worked with Joel. Joel's team got us $7 million. So thank you so much. So that was critical for us because I think we felt very confident that like once we had, the contract and the money, like this was just going to be operating business as usual. Like we were going to do what we do best and like it was going to be financed and that was great. So we had kind of no issues on how we were going to execute, but there was a lot of just kind of black box around like what are they looking for and like kind of wording in grant applications. Like I had no idea what like a SAM ID was, like that kind of stuff, like was daunting to us, so we made sure to outsource it, and we made sure to be very specific about like what was our probability of winning, like what was a probable like amount we should apply for, that would increase that probability, how much time was it going to take, things like that. And we were very successful. um, and then I think once we had the funding, it became, since it was just like another kind of objective and key result, like that wasn't some big deviation like from our other kind of like top line, KPIs. It became the general manager's responsibility. And she was responsible for just executing on that project, which again was not a deviation from what she was already doing. And then it, of course, added a little bit of admin and reporting work, but we already had like a really, really robust like Salesforce that we had in terms of like tagging like cost centers and like how we were managing customers. So like we were able to rise to that occasion. And I think we also, and everybody should consider this, like I would have been I feel like we would have required a lot more like company transformation if we had gone on the first time out for like a $25 million grant. Like that would have, I felt that we weren't prepared for that. And, maybe that's not very ambitious, but like I think we wanted to kind of dip our toes into something that felt more kind of reasonable at the time. So yeah, it became the general manager's responsibility, with some oversight like from me as kind of like her part-time CFO like financing strategist. And since this was such a core part of our business model, like we went out and we matched it too. So we got a lot of other private funding, to match the grant, and I think I would encourage a lot of people to do that. So I cannot stress enough that if it's like part of your core business model, then it won't feel as much of a heavy lift.
I should also
Okay.
mention, though, that I think Morgan and her team approached it with the right level of seriousness and took the time to resource it properly internally, figure out how it did align with their internal systems, and actually do the work on the front end before the grant was even awarded to figure out how things were going to work to a certain degree and really align it with their roadmap. So there are a lot of the things we've been talking about and how you can do it, do things right, setting up your systems, aligning the projects. Morgan and her team did really well, which is why it was easier for them on the back end.
I'll also just
I'd
chime
say,
in really, really
yeah,
quickly that folks on the reports, on the applications, your name is signed. I imagine Morgan's name was right at the bottom line as
yeah.
the, party contracted to do business here. And that comes with both personal responsibility and personal liability. So it is really important to take it seriously from the beginning.
Right. Like our general manager is responsible for everything, but yeah, ultimately it is my name signed as kind of the accountable party. I also remember kind of post award, like we had hours and hours of conversations with our accountant. Like that was kind of a big prep we had to do internally on like how we were going to classify this, like where it was going to live, things like that.
That's a great way to segue us into its blend in the capital stack. That, like, if this is already aligned to the roadmap and you're treating your program officers in the grant like another investor, the people who are strategically helping navigate that capital stack and blend it all together are also best positioned to be working with the bookkeepers and accountants and, connections with the errands of the world to think about like receivables financing. Like, that's all in one package. Super helpful. Before we dive into specifically, I know some people have been asking in the chat about the capital stack. I want to quickly take a quick sidebar about SBIR and STTR grants that in theory expired last September and like aren't currently making new awards at present. Does anyone have a different take or specific view on any updated news about funding to come from these programs? To the best of my knowledge, I haven't heard either, and I think everything's still on pause.
I mean, so yes, they're on pause. There is a near 0% chance the SBIR funding is going away. So you do not need to worry about that. Basically, what is happening right now in Congress is if this is maybe inside baseball, but there's things called SBIR mills. So there are these companies that just get SBIRs, tons and tons of SBIRs and fund a bunch of projects that don't really go anywhere and just get a bunch of government money, and then there are some consultancies that kind of support SBIR mills as well, and so there's kind of a sticking point in Congress where some of the representatives and senators are just saying, we need to reauthorize this program. It's really important, and others are like, well, we kind of need to change the rules and crack down on SBIR mills. So there's not exactly an impasse in Congress, but they're kind of negotiating the rules. And even though a lot of the SBIR programs still have some money, like the DOE SBIR program, for example, a lot of people have had applications pending there for a while. They do have the money, but a lot of the SBIR programs are kind of on pause just to see how things shake out. But there is a near zero chance the SBIR is not coming back. Like, it is coming back. It's just going to be maybe a little bit of time, but it's likely going to be like mid-year, I would say. So you should expect those programs to start up again, maybe with slightly different rules. But that is coming back. It was one of the only grant programs in Project 2025 that they were like, yes, we're gonna keep this. Everything else was like, get rid of it.
Awesome. All right, well, we'll stay tuned on that front. Thanks, Stroll, for the extra color. Um, Elka, I want to come to you to talk about the capital stack. You actually work with a number of clients kind of mid to late stage as they think about layering grants specifically. Can you tell us a little bit more? I mean, shout out to Wilson Sonsini. Everyone should retain you is the short answer of this. But also, can you let us in on like what is your common advice and practices as you work with these founders who are thinking about like how to bring in grants to the capital stack? Because after this, we'll all dive into the like when specifically.
Sure. So I'm sure as many of the founders on this call and the ecosystem builders as well know, hiring counsel is super expensive. Hiring accountants is expensive, consultants and so forth. So there's always a bit of hesitation to retain counsel to assist in drafting of applications, understanding compliance functions, exploring sort of alternative structures that would work, helping to understand the structures that are required. There's hesitation because, folks are bootstrapping, they're scrappy, they're not trying to earmark a bunch of money for legal spend. But what I will say is that well-positioned law firms, mine, of course, front of mind for me, are really in a unique position to assist both on the access to information and historical knowledge frontier, as well as helping through the requirements of the NOFOs as they stand to make sure that this organization is really in a position to meet and exceed the requirements there. So what I'm thinking through of are different types of opportunities for federal funding that may not just be front of mind. There seems to be a trend, right? People will start out with historically SBIR grants or sort of smaller grants and graduate into larger grants with more complexity from there. But there are a number of opportunities that are out there that sit on the books that are granted for Congress, right? I'm thinking of ARPA-E, I'm thinking of Hall amendments, I'm thinking of many different sort of avenues to look at your technology and look at the current state of emphasis on federal opportunities and really suss out what hasn't been touched for a while, what would be right for picking up and running at hard for a little while. That's where your not only legal counsel but sort of respected peers and folks with this historical experience can help you think that through. It's also really great to have sort of what I call non-dilutive funding on your capital stack because it lowers the cost of capital in such a way, and it really de-risks a lot of early stage pilots, first in kind projects, demonstrations, and so forth. And so the more companies that I think look for a thoughtful way to incorporate these non-dilutive capital slugs of money into their capital stack are largely in a very much stronger position than those that, from my opinion, go out and seek solely venture capital money. There's also really great ecosystems as well, right? There's NIH funding, there's an entire life sciences industry that is built on the backs of non-federal, non-dilutive funding. And they use that to the tens of millions of dollars amounts. So there's I think it really is sort of an underemphasized source of capital. Again, you need to do the front leg work to understand the regimes that you are therefore subject to, but I think it's really important. Another thing to keep in mind is with it when it comes to understanding the regimes that you fall under when you take in this non-dilutive funding is who else is on your capital stack and how that plays. So depending on the regime you fall under, you might need to accommodate or you might need to work around the fact that, for example, there are some foreign investors or foreign controlled investors that are on your capital stack. Or perhaps there's something in your supply chain that will make it difficult to achieve the Davis-Bacon Act or Build America, Buy America Act, really reading through those requirements and understanding sort of where not only your investors stand, but also some of your supply chain issues stand will help build out what needs to be done internally and whether it's worth it. But generally, when I see a company come to me and they already have some non-dilutive capital, a fair amount of non-dilutive capital on their cap table, I'm very pleased with their both commitment to diversification and also their reduction in the cost of capital early days. And I think it's always a great tell, and those companies, from my experience, largely do very well. I know Morgan also shared the combination of seeking private capitals, matching capital as well. If you have the bandwidth to do that, that's an incredible additional suspender to put on that pair of pants for you.
Just to piggyback off of that, I think we see people using, this kind of non-dilutive capital in a couple of ways. So sometimes you've just raised an equity round and you don't want to spend money, like that money on like some particular project. So it makes sense to go out and get grant money. Or sometimes you're it's actually a way to delay raising equity. And then you're able to complete a milestone within your company milestone, and then go out and approach investors and say, I just completed this. We qualify now for a program size of 5x this. So it's a great like leverage point. And so I think that's why a lot of people come to us too, is just to, you know, they feel almost obligated to raise dilutive capital in order to execute on a grant program. And so you have to weigh the cost benefit of, you're going to be paying interest on our capital, but obviously, like equity capital is a lot more expensive to be spending on something like this. So there's a lot of like things to consider there.
Yeah, one thing I forgot to mention, I'll just chime in really briefly, is there's so many more opportunities in revenue streams as well. Once you start engaging with some of the larger agencies and getting the company or the technology up to the requirements that they have, then it's usually you're in a better position to have discussions around having the government or a particular agency be your off-taker, depending on what your technology is, or somehow take advantage of certain certifications, security requirements, or otherwise that you received by virtue of taking this grant and using it appropriately. So depending on the nature of your technology and your company, keep that in mind, as well as think of this as sort of a possible revenue stream that you're teeing yourself up for.
I think those are great commentaries to like articulate the incentives of the capital stack, right? Grant plays concert and sometimes first chair, but concert with all of the other investors. And what I hear within both of your comments is really the importance of accelerating milestones, bringing those milestones forward, accelerating revenue, both of the grant itself, but also of other customer contracts because of your ability to reach more geographies quickly or broaden the portfolio more quickly. And in addition, I think for many of the hardware companies and folk projects in the audience and beyond, really that's like ideally acceleration down the cost curve, right? Such that, cost sharing can help investors. You take less dilutive capital for, in a market that's really tight while you're scaling down that cost curve or scaling down the economies of scaling the manufacturing of your supply chain in order to make the next project or portfolio of projects look more economical. Yes, you can call that a milestone, but like specifically, right? It's making everything more economical for the next customer you sell to and the next project that you're purchasing, and knocking off the rest of those learning curves. Morgan, how have you historically been thinking about the sequencing of equity, debt, and other kind of non-dilutive grants within the capital stack for the ways that you've utilized them?
Yeah, so in our case for Navajo Power Home, for example, we we install CapEx. So we're installing solar systems and then we're servicing them for the long term. So that's a big OpEx component too. So Navajo Power Home, for example, raised like a very small equity round at the very beginning just to kind of get the company started, but we naturally weren't using equity like for CapEx. Sorry, for like our CapEx projects. Obviously that's capital expenditure. So we would raise loans for that. And that's actually what our grant funding would go to. It would be to continue to, purchase the assets and then install them and then have like the servicing component too. And that is where we would look for private capital matches. So additional loans. And then oftentimes like additional private grants, just because we were working in like a highly economically marginalized area, like it was easy for us to access, foundation money, philanthropy money. So I think, Aaron was touching on this a little bit, like you have to be careful on like where you're allocating like equity versus like, versus other non-dilutive capital. Um, and in our case, like we were very strategic about what we wanted to use grant capital for because we felt that we could go out, we could get loans, at market rate, and we could install, our services for a subset of the market. But we knew that there was another subset of the market that could not afford our service at market rate. And that's actually what we used our federal grant making for, is to be able to highly, highly subsidize it, like up to 85% basically, for that like very, marginalized, like very economically depressed user. So, we have very, very specific uses of every form of capital that we're taking on. We take on just like regular loans, which just help grow grow a service, we take on grants, specifically for a subset of the market, and then we take on, private grants to kind of propel like all of this together. And we would never ever touch equity for any of that. We have a model, with unit economics that works really, really well, and we know which type of capital to plug into everyone we want to grow.
That's
And I think,
fantastic.
people like love the kind of the stability and the milestone of a federal grant. And I think it really helps you like take that and go out and raise, whether it's private foundation money or like just another loan to grow your business, the other line of business you have.
Meaningful. Appreciate that color. Erin, I wonder if you'll help us shed some light on, like, look, we all know that part of the inherent nature of your business is that like there's a big time lag in grants in some ways. How do you see founders avoiding the most common mistakes when modeling out grant cash flows?
I think it's really just having like a backup plan if, even the, 30, 60, 90 days, whatever, doesn't come to fruition. So not like scrambling at the last second to put something in place. So either that's like if you already have a loan with us, then requesting like an extension on a certain payment because of XYZ, or getting your like friends and family or kind of a friendly bridge in place. Because like the government agency does not care. So, like that you'll go out of business before they're like, okay, we can, we'll fund you right away. They just have no impetus. So I think it's really just having that backup plan, and then of course like being very proactive on the things that you can control, like your proper invoicing and clearly articulating milestones and being in discussion with your program officer.
I think
Helpful.
there's ways to mitigate this on the front end, right? I think services like Enduring Planet are incredibly helpful, and yeah, talking to them before you're out of money is definitely a good idea. I mean, you should also not pursue grants if you're out of money. Like this is not like a fast turnaround thing, right? And government grants oftentimes take 6 months to review, another 4 to 8, 4 to 8 weeks to do contracting. If it's a really, really large grant, the contracting can take a lot longer. So you're looking at 9 to potentially 12 or 8 to 12 months in some cases before you're actually getting money in the bank. Some state grants can be faster, but that's a pretty typical timeline, right? And then of course there's additional, sometimes depending on what the project is, as Aaron mentioned, like additional lags. So I mean, grants are something where you inherently have to plan ahead anyway, right? These are 3, 5, 7 year projects. And so if you are making sure that your project design is aligned with your roadmap across this the full spectrum of like a multi-year project, you should also plan for the financing to be coming in at a certain time and understand what those lag times are. You can also design your project to front load costs. So even if the first payment is delayed, if you have a multi-million-dollar grant, obviously it needs to make sense with the project design, but you can, set some like fast, big milestones in the beginning to kind of like get some extra money in the door. In Europe, actually, a lot of grants have pre-financing, so they will give you a pretty large portion, sometimes up to a third of the money in a lump sum up front. And so that can be really nice as well. And in the US, people don't do this very often. We actually do this a lot. You can request upfront payments. You can certainly do it from the federal government. It's like less common there. But for state agencies like the California Energy Commission, you can, even if it's not part of the normal thing that folks do or the normal process, you can say, hey, we have this like big equipment that we need to buy that has a really long lag time. We can't just pay for that out of pocket. Can you give us some money up front? There's been quite a few times where they've said, okay, cool, here's 20% to buy this equipment or do some other long lead thing. So it does not hurt to ask. Certainly, like, they do not approve it 50% or maybe even 30% of the time, but there are a number of different things you can do to both on like the strategic side and then when you're actually in the process to help those things.
Can I ask also to this room, anyone can jump at this one. How do you see the award and or receipt of grant funding affect valuations from equity investors or other private investors, if at all?
Sort of affected us in the sense that like we were like our, top line income we were booking in terms of like project value was like tripled in 1 year. Um, but I also think that there's a question of like, is it recurring? You know? Um, and in our case, it's not really recurring, but you can argue that it is like kind of sending you on this like path to scale that's quicker. So I think, I think you have to consider both factors. In our case, it helped a little bit, but it wasn't game changing. But I think if you're like a first of a kind and you're really like it's helping you like just completely transform your go to market and like maybe the affordability of your product, like maybe that's different.
I've also heard like the opposite too, right? Like people are like, oh, well, how at risk are, if you're just mostly getting revenue from government agencies and with like the lack of confidence in the government right now, some investors have been like, well, this might not be a long-term, source or so I think it
Yeah, I
can.
think kind of like the unspoken truth in this room is like you never ever want to depend on grants. It's like your business model because that's just like not really your business model unless the government is just perpetually your customer. And like, yeah, that's probably going to be a problem at some point.
And I think there's also, it may not affect the numerical valuation, but different investors, it is seen as positive by certain investors. Like something that we've done is kind of helped certain investors and VCs kind of understand how to properly diligence companies with grants because pretty much every climate company is like, oh yeah, and there's also grants out there. Here's a slide in our deck about that. And it's like there's a big difference between saying there are available grants and actually having a plan and resourcing to pursue those grants and a track record. And so investors don't always know how to diligence that super well. But if you do have a really strong plan in place, it can be one factor that they take into consideration when making an investment decision, even if it doesn't affect the actual valuation itself.
Yeah, the only thing I would add to that is there are certainly certain investors who see the value of grants, particular grants, right away and feel de-risked by them. So that's great. But it's also important to keep in mind, depending on where you're at, you can structure things differently. I know someone was asking about SPVs and project level work. There are different ways to sort of allocate federal funding or non-dilutive funding to a particular project, and that project's going to have its own valuation that may or may not be a material valuation at top co level as well. So depending on what you're doing and the type of grant and the size of it, sometimes it's worth more effort than not, but I would definitely encourage you all to consider it a de-risking factor if it's used properly, and it will ultimately lower your cost of capital, even if not recurring. So it's a great thing to understand and be able to have some fluency around when you're talking to investors who might not be so familiar with the benefits.
Super helpful. I think a number of founders have, thinking about the timing of it all is part and parcel with thinking about the communication to other milestones and fundraising plans. And while it may not move the valuation numbers inherently, it can have a really big bottom line impact on what we talked about with coming down the cost curves, in going into new geographies more quickly or like a growth story there. But usually those valuation numbers tick really based on other aspects of the business and especially toward pathways when the grants are no longer a part of the picture at all. We've talked a lot about the operational capabilities and the timing within the capital stack. This has been such a rich conversation. Thanks to all the panelists. If anyone has any last questions here in our 7 minutes, bring it on in the chat. But I'll end here with a bit about kind of when to like sprint hold or wait and then when to stop? Like, what are some of the operational decisions or internal, maybe, self-reflections in the mirror when to know to sprint after big awards, even if it feels like a push, when to know to hold and maybe build internal capabilities or processes before going after maybe bigger grants or any grants, and then when to know to kind of wait, when to know how to be disciplined and say no. Joel, I wonder if you'll lend us some color first, but invite, of course, lots of contributions from anyone else.
Yeah, I mean, I think in terms of like we've talked a lot about return on investment here, and I think you do want to have grants that are sufficiently high return on investment and dollar value is a part of that. So you want to make sure that you are going after grants with sufficient kind of ambition and imagination, and you aren't stuck in the mentality of, oh, I have to go after tiny grants and then work my way up by hundreds of thousands. But going after larger grants may require a partnership strategy as well. But I think I think partnerships are a really key element of whether you're ready to go after like larger scale grants or not. Like certainly like SBIR grants, for example, you can go after on an individualized basis, but if you're going to be going after even multi-million dollar grants, you need to have mature partnerships. And sometimes it is smarter to do those to secure those proactively. Sometimes you can secure those relative to an individual opportunity, but being able to develop those partnerships and execute on a partnership strategy effectively is a really key element of that kind of readiness. And then the ability to just be strategic in these areas, right? Having a clear technology roadmap, having a clear pathway to commercialization and scale is going to be really important to enabling you to make sure that you are going after the grants that you're going to be the most competitive at and are the most highly aligned with. And then you have to be able to comprehensively identify and assess the funding opportunities that are right for you. And so there's some kind of infrastructure or systems there that you need. And then having knowledgeable grants resources, whether those are internal or consultant, like all these different elements are really important to being able to kind of have the operational expertise to go after these things with a high rate of success, which really success rate is really the name of the game.
I would just say to like any other founder, just like especially that's like leading like a sales organization, like just put this in your funnel and treat it like any other deal. Like you have to understand the sales cycle, you have to understand the probability, the deal value. And like if your sales cycle is going to be 2 years and like you can get the same deal value at the same probability from like a different source, like in like half that sales cycle, and like those are just kind of like the key top line things like you need to understand. Like don't treat this like outside of your business model. Treat anything that you're going to be doing like raising money and getting capital as like part of your like regular sales motions and how in like your sales KPIs. Thanks, Dimitri.
Amazing. That's a great way to end us into kind of a quick rapid fire 4 minutes. If you had to summarize a bit of our conversation today, Aaron, I'm going to come to you first. What is the one material improvement to ROI, and what's the biggest admin mistake that quietly kills value? And then I'm going to come to each of you with the same. So, like, biggest lever to pull to improve the ROI, biggest admin mistake to avoid.
Well, from my perspective, I think it's cash flow planning for, delays and so that you don't get screwed in the middle of a project. And something that kills value, I think, yeah, letting I'm gonna steal Morgan's, letting the grant live outside of your business model.
Okay, Elka.
Um, biggest ROI is going to be, I think, getting your arms around all of the possible opportunities. And even I think they're infinite in nature. We didn't even talk about it, but sometimes founders who are tech founders will come to me and say, there's a grant out there to build a manufacturing facility, and I need to build it because I can't do it domestically. And I'm like, are you really prepared to build the facility that you need? Right. So, getting your arms around it, being aware of what the universe is and any updates that are happening. And then other side of the lever, not being prepared for the compliance regime that is ultimately required, because you'll get the money in the door and then you're going to have to pause the business to set up the organization that you need to be compliant.
Okay. Joel?
Yeah, I think that, kind of what I was saying earlier, just the overall strategy should be for ROI specifically, go after a smaller number of grants with a higher dollar value and a higher chance of success. And if you're able to effectively execute on that strategy, you're going to automatically have a higher ROI with grants. I mean, I think administratively, like you have to set up your systems before you start executing on the grant. I mean, I guess you don't have to, but if you want to have a high ROI and not make it just be kind of a slog, you really need to set your systems up front, not figure it out as you go. And it, I think the grant administration can be a lot easier than people think.
Helpful. Morgan?
I'm actually surprised nobody has said this, and I swear I'm not being paid to say this, but like you need to outsource the grant application process. Like, I'm not a grant writing expert. Like, I don't want to spend my time doing that. That takes a lot of time. So, like, get CFS or somebody else to do it. Like, I would not touch that again if my life depended on it. And because it's not what our business is good at. So, like, and then answering the second part of the question, like, focus on what you're good at. Like, we were good at installing, servicing, like, and prospecting customers. Like, we're not grant writers. Like, I have no interest in writing a grant, but I have interest in like doubling down on what I'm good at. So like, don't apply for a grant on something that you're not already like a freaking expert at. Don't ever change your business model for a grant.
Love it. Thank you so much to everyone today. This was such a productive panel. And to those in the chat, we'll send out a recording and some follow-up notes in the coming weeks, hopefully next week. But Elka, Erin, Morgan, Joel, thank you so much. This was so rich.
And if you have
Thank you.
suggestions for things we should focus on for future series, hit us up. You'll get a little review thing too. And we would love your suggestions, please. Thank you. Bye, everyone.
Awesome, folks.
Bye.
Thanks,
Take
everyone.
care.